Howdy, Jacob here. Today we're looking at the company Allient, company 27 of our generic stock screener in the electrical equipment industry. Just over $500 million market cap on 695 million enterprise value. Looks like they do have some net debt here. I'm looking at their insider ownership, and it is 16% almost. So good insider ownership. That's a positive sign, meaning that the company is likely going to do what's best for you as a shareholder, as they themselves are heavily invested into the business. Incorporated in 1962, they've been around quite a bit, and growth has actually been pretty impressive. You're looking at double revenue from 2014 to 2023, with increased gross margin but declining operating margin. And earnings per share growth has been relatively small. Again, makes sense with their operating margin declining. Return on invested capital now averaging that mid-single digit. It used to be, looks like it was upper single digit. So not all good signs, but again, it's just part of the story. 32 million cash on hand with no short-term debt, 210 million long-term debt. They are a bit levered. That 210 million is a good amount in comparison to their free cash flow. So they are reinvesting quite a bit by making acquisitions. And their dividend of 2 million is minor in comparison to their 5-year average free cash flow, maybe 10-15%, and it's about, on a yield basis, 0.4%. So not a huge dividend, but they can afford it. Their use of cash is really heavily based on acquisition, and it looks like they fund it not just through their free cash flow, but through issuing debt. And there's going to be a time where you can't just issue debt more to get, you're going to become over leveraged. So you're going to have to put the past perspective into your perspective view, but you're also going to have to balance out that the company can't just do what they've done in the past forever. Their debt ratio is going to get too big, and no one's going to be able to lend to them. And then I always say that they're going to have to sell off assets, which can turn into a downturn very, very quickly. So that's one of those things you definitely don't want to mess around with. So we're definitely going to have to take that into consideration with our forecast here. But on the growth side, they are growing quite a bit. A lot of this has been through acquisition. I will dampen it a little bit due to the fact that, again, they've been funding it beyond their free cash flow and going into debt to mostly fund this. And I don't like that their operating margin has decreased with this. If I want efficient acquisitions, which is what I want if you're making acquisitions with the use of free cash flow, I want not just top hit. I just don't want it to hit the top line. I want it to hit the bottom line as well and hit the free cash flow line. We're not necessarily seeing that. So maybe 6% revenue growth, and then again, mostly through acquisitions, and they're not historically doing a great job of those acquisitions. So I think 16p, just pretty much market average, makes sense to me. Close to market average here. Maybe let's do 4.54 with heavy share changes. Was that through stock-based compensation? So 5 million. Haven't been buying back any shares. Yeah, we'll do 1% there. And the dividend is still pretty cheap, but they haven't increased it too much. Maybe we'll increase it with their revenue growth figure. And we get to a price that still needs to fall over 50% to get to the price we're looking for. Interesting company. I don't like declining operating margin. I don't necessarily like the amount of debt that they have. And I don't like that they've been growing through acquisition, even though their growth has been very substantial. It looks like their acquisitions aren't necessarily the most efficient. And so not necessarily a company I would definitely want to own, but at the right price, again, I want to own anything. And so this would just have to fall quite a bit more for me to be really attracted to it as an investment opportunity. But I hope you enjoy the video and have a great rest of your day. Thank you.